Hello students, I hope you all are doing good and fine. So in our today's video, we will be discussing your question number 3 from your December pre-mock. So the first question, we have done the consolidation. The second question regarding the ethics also we have done. Then coming to the section B, the question number 3. Chalo, let us start with the question number 3. As mentioned, when coming to your section B, the first question will be regarding IS and IFRS, and the question number 4 will be IS and IFRS as well as some current issues or from investors' point of view, etc. So let us do the question number 3. Chalo. W is a manufacturing, no, sorry. W is a construction company. W is what, sir? It is a construction company. Simple. We can see that. That prepares its financial statement using IFRS accounting standard. Okay, this company prepares its financial statement using IFRS accounting standard. It has a financial year end of 30th June 2000 X3. So year end is what? Sir, year end is 30th June 2000 X3. The following exhibits available on the left hand side of your screen provide information relevant to the question. So based on your CB platform, it will be on the left hand side. You know that. Yes, sir. So the first question is what? Revenue contract with our company. Revenue contract with Rainbow Company, that is our company, describes a contract for construction of an office block. Okay, so it's a revenue contract with our company. We have a revenue contract from our company, describes a contract for the construction of an office block. We have to construct the office block. So here IFRS 15. So I think IFRS 15 is tested. So if it is regarding construction, so most of the time we have seen construction will form a single performance obligation. So revenue is recognized over the period as and when the work is done. So on there are two methods, input and output basis. Then we recognize, sir, revenue, we recognize cost of sales. We follow four steps. Step one is we see whether overall profit or loss. Step two, we calculate the percentage of work done. Step number three is the revenue and cost of sales. Step number four is contract asset or contract liability. Simple. Then we have a disposal of a overseas subsidiary. Okay. We are disposing of a overseas subsidiary. Whenever we dispose of an overseas subsidiary, what will happen? So when we dispose of a subsidiary, control is lost. Sir, gain or loss calculation we have to do. And if any gain or loss is recorded, your foreign exchange gain or loss. Sir, if foreign exchange gain or loss is recorded in your other comprehensive income as well as in and accumulated in translation reserve, once we dispose of a foreign operation, we reclassify back to PNL. That is also a gain to PNL only. Okay, sir. Then the loss carry forward. Okay, losses are carry forward. We can carry forward the loss and deferred tax. Okay, sir. It's IAS 12. As I mentioned, this question we have done a lot of times in the exam. In the lot of time, this has been tested, as well as when we have discussed the past papers. We have seen this topic: losses carry forward and deferred tax. So when can we carry? When can we record a deferred tax? So deferred tax can be recorded when the losses can be carried forward, and sir, deferred tax can be recorded when there are future taxable profits. Sir, in future taxable profit should be there. Sir, if taxable profits are not there, we should have tax opportunity. Yes or no? We should have some tax opportunity. With that, we can create some profits, taxable profits. So either profits are there or taxable opportunities there through which we can record what? Through which we can record a deferred tax. Through which we can record what? Through which we can record deferred tax. Tax opportunities means like tax planning opportunity. We can save some tax, etc. Yes, sir. So let us discuss that. The information should be used to answer the question requirement within your chosen response option. The response option is provided. We have to type out the answer there. So then let us read the requirement first so that we can understand here. So see requirement. Using exhibit 1, explain how W revenue contract with R should be accounted for in W's financial statement for the year ended 30th June 2003. Okay, they are saying that how should you record the revenue? So we have to explain each and everything. How many performance obligations are there? Whether it's a single performance obligation, revenues recognized over the period, what is the transaction price, etc. And show amounts to be included in financial statement. We have to show the amounts that are included in the financial statement for 12 marks. A very easy question and a very easy topic. for 12 marks. Understand that if you know input output method, the calculation of your percentage, then your what we say contract asset contract liability calculation, it will be easy. Excuse me. Then using exhibit 2, calculate and explain. Okay, we should calculate first and explain the gain arising to the well W group on the disposal of the overseas subsidiary. So we have to calculate the gain when we dispose of this overseas subsidiary, that will be recognized in consolidated P&L. So what is the gain that will be recognized in P&L? We have to calculate as well as explain, including the accounting treatment of the cumulative exchange difference. See, I mentioned this cumulative exchange difference, which is there. क्या करेंगे इसका अपन? We will transfer this to what? P&L. We will reclassify this to P&L. बेटे. Transfer means what? From your translation reserve, we will take to P&L. Yes, sir. For 6 months. So calculation will be 3 marks. Explanation will be 3 marks. Easy topic here. Then using Exhibit 3, discuss whether the deferred tax should be recognized in financial statements for the year ended 30th December 2003. So that means I think they have recorded the deferred tax. We have to discuss whether it is right or we should record it or not. So basic technical marks will be there. 2 to 1 technical marks, writing the technical knowledge of the standard. And then what we say, we have to see whether future taxable profits are there or not, or any tax planning opportunities. Yes, sir, 7 marks. Okay. Easy requirement. I think it's not, it's easy. So out of 25 marks, our aim should be what? 18 to 20 marks. So easily, I think we can score here by writing 20 to 25 sentences. Easily we can score. Chalo, then let us start with the first requirement. A easy topic. I think, oh, okay. You can see the data which they have given. Arre baap re baap. Sir, if this much data is given, that is the reason the question is for 12 marks. No? Question is for 12 marks, 12 sentences. 12 sentences means calculation will be 4 to 5 marks and 8 to 9 sentences we have to write. चलो let us start. पहले पढ़ लेते क्या लिखा है, डेटा क्या दिया हुआ, what is the data? Revenue contract with our company. Sir, W company has done a revenue contract with R. Okay. On 31st October 2000x2. Okay. On 31st October 2000x2. Our year end was what? 30th June 2000x3. Year end was this. Keep in mind year end. Okay, on 31st October 2002, W and R signed a contract to construct an office block on a land owned by R. So they have signed a contract to construct the office block on the land owned by R. That land will not belong to us; it will belong to R. But we should record revenue on that as we are doing the construction. Yes, sir. Then on 1st January 2003, our company paid a non-refundable deposit of 6 million to W. Okay, on 1st January. Okay, on 1st January they are doing the payment. Okay. On 1st January, paid a non-refundable deposit of 6 million to W. Sir, this 6 million will be part of your transaction price, sir. Yes, sir. Fixed payment. It's like a payment which we have received. Yes, sir. W company began construction work. Okay, on 1st July, they have started the construction work. So if they have started the construction on 1st January, we have to consider from the date only to record the revenue. And the construction can take 2 years, 3 years, as we know. Construction, whenever we construct single performance obligation, most of the time, then we will see in this case, then revenue is recognized over the period, not at point in time, because as the company is performing, it is creating an asset for whom? As the entity is performing, it is creating an asset for our company here. Then the contract does not contain a significant financing component. So significant financing component we have to ignore it. Chalo. The work should be carried out in accordance with our instruction and completed in 18 months. Okay. Sir, it is taking 18 months to complete. Yes, sir. By 30th June 2004. The construction, when are we starting the construction? So we are starting the construction on 1st January. 1st January 2003, and they are mentioning that it will take approx 18 months. 18 months. But our start of the year is what? 2000 June. A year end is X3. So year end is X3, that is 6 months. Then, sir, R will make further payments. Okay, R is making the 6 million, as well as further payments are also made. Okay, these all payments will be part of what's your transaction price. because transaction price का meaning क्या है? Step one is what contract should be there. Contract is there. Step number two, identify the performance obligation. Till now, we can say there is one performance obligation. Step number three, identify the transaction price. We have to identify what is the transaction price here. So transaction price includes fixed payment, variable payment, non-cash consideration, significant financing component, customer provided goods or service, consideration payable to the customer. All these are considered. But here we know that six is there. We have considered that. Then other payments, let us see. R will make further payment as follows. 8 million on 30th June. Okay, sir. So within this year, the year end is 30th June 2003. So in the current year only, what is the amount we have received? So 6 plus 8 million. So in total, we have received 14 million in this year only. In the current year, we have received 14 million. Then, okay, when 30 percentage completion is done, they're saying 30 percentage of the product is completed. So in the current year, we will recognize revenue for 30 percentage. Chalo then, sir. Let us see. 8 million on 31st December 2003. Okay, 31st December 2003. After 6 months, they are paying 8 million further. So that also will be part of my transaction price. This plus this, each and everything. Yes, sir. Then, when 60 percentage is completed, then 11 million on 30th June 2004. Excuse me. After 6 months, from 31st December, they are paying for the 11 million on completion and transfer of office block, sir. Okay, the transfer is done on what date, sir? So transfer is done on what date? So transfer is done on 30th June 2004. Now revenue we will recognize over the period. Why I'm saying over the period? Because as if I'm the construction company, as I'm performing, it is creating an asset to you. Same way as W company is performing, it creates an asset for our company. If the office block is not transferred by 30th June 2004, okay, they are saying what? If office block is not transferred by 30th June 2004, okay, some penalties that let us check. The final payment will be reduced by 1 million for each following month of delay. They are saying if the project is not, or the office block, if the project is not completed by 30th June and transferred, if the office block is not completed and not transferred, the final payment will reduce by 1 million for each full month of delay. So every month you do delay, if 1 month delay, 1 million will be reduced. So if 1 month delay is that, 1 million for each full month of delay. If full month of delay is there, 1 million we reduce. If 15 days of delay is there, then no problem. Full 1 month delay is that, 30 days or 31 days delay is that, 1 million we will not give you. So can I say this is what, sir? Variable consideration. So I get to know ki this 8 was what? This 6 was fixed. This is also fixed. This is also fixed. But this 11 million can vary depending upon the transfer of the office block. And this is variable consideration. Sir, what we will write down? So first I'll say it is a single performance obligation. Then I'll say the revenue should be recognized either at point in time or over the period. So in the given case, as the construction is done, it is creating an asset for our company. We will recognize the revenue over the period. Then I'll say the transaction price will include fixed payment and variable payment. Fixed payment of 6, 8 and 11. This 11 million also will be included, but there is a variable payment will be which will not be received if the office block is not transferred by 30th June. For each 1 month, the reduction is 1 million. For full month, it's not. If 15 days delay is there, then no such problem. If full 30 days, full 1 month delay is there, the payment will reduce. Then see now. On 1st January 2003, W purchased plant for 16 million. Okay. On the same date, we are purchasing a plant for 16 million to be used exclusively on the contract with R until this completion. Okay, they are saying this we are purchasing this PP for use of this construction purpose to construct this office. So, sir, if it is purchase of PP, depreciation comes into picture. Yes, sir. As well as the asset also will be recorded in financial statements are carrying out, because the question mentioned what? If you remember, the question also mentioned what? The question mentioned that also show the amounts to be included in financial statement. We have to show what will be recorded in P&L, balance sheet, etc. Yes, sir. Chalo. Yes. It is expected to be used on other contracts subsequently. So once this project is done, we will use that PP for other things also. The estimated useful life is 5 years. So 5 years is the estimated useful life. 16 divided by 5. What is the per year depreciation here? 3.2, sir. But our year end is what? First year end is only from 1st January to 30th June, only 6 months. Let us see. W will incur material and direct labor cost of, okay, material and direct labor cost of 1.2 million per month to fulfill the contract until the office block is completed. So every month, what is the cost they will incur? 1.2. So 1.2 is what? Can I say 1.2 is a cost here? Cost of sales, like we record no cost of sales. It's a cost to complete the project. So 1.2 into 18 months. So what is the total cost? So 21.6 we can see. Yes, sir. There are no unused materials held in inventory. There are no such unused item. Yes, sir. In April 2003, material purchased for the contract were damaged due to the employee negligence. So there was a damage due to employee's negligence, resulting in one of rectification cost of 2 million. So that is a rectification cost. It's because of the employee. This also, will this be part of the cost? No, it is abnormal. So it will directly go to P&L. P&L under operating category as an expense. Rectification cost. As a result, W now expects to transfer the office block to R by 15th August. So W is saying that we will transfer the office block. We will transfer the office block to R by 15th August 2004. We will transfer by 15th August. But what are the date we had to transfer this? It was 30th June 2004. There is a delay of how many days? There is a delay of 1 month and 15 days. 1 month and 15 days. But if there is 1 month delay, do we receive this 1 million? Do we receive this? We will not receive this, sir. So that means this 1 million I have to reduce from this. My transaction price will change. 1 million we have to reduce, our transaction price will change. Yes, sir. The contract is expected to be profitable overall. So contract is what's a profitable overall. Sir, if it was loss making, remember we have done a same question in the class for input and output method where we purchase a PP, etc. So if the contract is profitable, bete, what should we do? Nothing. If it is loss making, sir, we have to record a provision and book the loss in the current year only by increasing the cost of sales. On 30th June 2003, the contract was confirmed to be 30 percentage complete. They are saying at 30th June 2003, 30 percentage completion. And R made the related payment. So they have done two payments here, 6 million plus 8 million. Excuse me. R is also expected to make the payment due on 31st December 2003 as agreed. So the payment, the next payments they will be doing as they have agreed. So this was the data which is given. But what are the requirement? If you remember, explain how W revenue contract with R should be accounted for in the W's financial statement for the year ended 30th June 2003 and show the amounts to be included in the financial statements. So each and everything we have to write. 12 marks requirement, huh? It's not the 4 to 5 marks we can concise, but 12 marks we have to write on good things. First mention performance obligation. First mention contracts is that it's a single performance obligation. Then mention revenue should be recognized over the period as the company is performing. It is creating an asset. Then we see the transaction price will be what? Transaction price will include fixed payment, variable payment. Fixed payment, we know. Variable payment, write down. Variable payment will be part of the transaction price to the extent that there will be no significant reversal in future. Yes. And there is 1 million ka reversal, will not include that. After that we will say, okay, the revenue that should be recognized, we have to calculate. We get the transaction price into the percentage. Then what will I say? The labor cost. Sir, it is for 6 months, so my cost will be how much? 1.2 into 6 months. Kitna cost hai ye? So 9.6 million is the cost. Yes, sir. Then depreciation is also there for 6 months. That is also a cost, sir. So my depreciation is how much, better? See, link it. So depreciation kitna hai? So we purchased a machine for 16. So 16 divided by 5 into 6 by 12. So for the current year, we record this as the depreciation, 1.6 depreciation. So carrying amount of the PP will be how much in the books then? So the carrying amount will be 14.4. We have to calculate what is the revenue, what is the cost of sales. Then the payment received is how much? So the payment received is 8 plus 6, that is 14 million. We have to calculate contract asset or contract liability. Each and everything we have to do better. Each and everything. So let us calculate the revenue. I am doing the calculation here. My transaction price will be how much? Sir, 8, 6 we've received, 8 plus 8 plus 11 minus 1. Sir, 15 months. Sir, 15 days. See now, this contract was for 18 months. Out of that, how many days delay? So 1 month, 15 days. But they mention what? This 1 million will be reduced when? So this 1 million will be reduced for each full month of delay. If full month of delay is that, then only 1 million will reduce. If not, it will not reduce. Baba, समझो क्वेश्चन को, समझना important. It's important that you understand. Yes, sir. So I say 1 million we will not include. So what is the transaction price? So 6 plus 8 plus 8 plus 11 minus 1. 32 is my transaction price. Yes, sir. What is the revenue then? So revenue is 32 into transaction price into the percentage. That is 30. That is 9.6 is the revenue in the P&L beta. In the P&L revenue we have. What is cost of sales, sir? So cost we have incurred 9.6 plus depreciation of 1.6. This is the total cost. That is 11.2 cost aa raha hai. 11.2. The cost is what? 11.2. Simple. Sir, what should we do for the 2 million? What will you do for the 2 million बेटे? वो 2 million का क्या करेंगे? Your cost is right, हाँ मेरे को गलत लग रहा है इस पर भी. 7.2 this is. That one I mentioned. It is a profitable contract, then how loss is coming here then? 7.2 plus 1.6. It's 8.8. Sorry, my bad. 8.8 and ये कितना है? 7.2 plus depreciation of 1.6. Yes, sir. Then, sir, what is the in operating cost, operating expense? We record something known as in expense also, that rectification of 2 million. That also we record. So marks were awarded here for regarding what? So this transaction price allocation explanation. How did we get this revenue? Cost of sales, rectification. Then we mention amount received. So my revenue is how much? Sir, revenue is 9.6, but we have received the amount of how much? 14. We have received the amount for 14. So what is the remaining? See now, revenue is, your revenue is what better? Revenue is 9.6, but amount received is what? 14. So we get a negative value. Negative value means contract liability. We have received more funds, but we have a liability of 4.4. Where will you show this liability, sir? In the balance sheet. We will show this in balance sheet. A very good question and a very easy question. It's not that key, sir, which out of the box hai. We have done this type of question in our class also, in our regular class. Input and output, sir. See, let me explain you again. They mentioned that we have given 6 million 1st January 2000 X3. Yes, sir. Then they mentioned what? 18 months is the time period. 8 million, 8 million is the payment done, 11 million is also done. But they mentioned that if the delay is there by one full month, every month, if a delay is there, 1 million they will reduce. So it's a variable thing. I will write down the definition and do that. I'll record this and calculate the transaction price. So the 16 million we will depreciate and include in the cost of sales. And then normal, what will I do for this? So normal carrying amount in the balance sheet. Then this 1.2 into 6 months is the expense. Then sir, 2 million into P&L as a rectification error. Then contract liability of 4.4. So what are the calculation also you will get marks. The first sentence I'll say it's a contract and it's a single performance obligation. Then I say revenue should be recognized over the period as the company is performing, it creates an asset. Then I say transaction price includes fixed payment and payment. Variable payment should be included to the extent it is it is what we say, variable payment should be included to the extent that there should be no significant reversal in future. Then calculate the transaction price. Fourth, done. 4 marks done here. Then what will you mention? Then you will mention what? Then you will mention here. Then you'll mention what? The revenue. The revenue, as we have seen, the 30% is completed. So the revenue that is recognized in the statement of profit and loss is 9.6. Then the cost incurred here are what? Material and labor cost of 1.2 million per month into 6 months. That is 7.2 is the cost which we record into P&L as cost of sales. As well as an asset is purchased, a PP is purchased for 16 million and the depreciation is charged for 6 months. So the depreciation comes to 1.6 and this 1.6 will be recorded as what? As the part of the cost of sales. And the carrying amount of the PP in the balance sheet is 14.4. Done with this. Cost of sales done, this also done. Then what? The amount received in the current year is what? 8 million as the payment on 30th June and 6 million as deposit. So the total payment received is 14 million. But the revenue which we have recognized is 9.6. So the balance is 4.4 as a current liability which we should record in the balance sheet as a liability. We should recognize this as a liability. Which liability is a current liability? Current liability because the project is completed within 1 year. No, coming 1 year it is completed. Yes, sir. We have to fulfill the obligation within 1 year. So these are the points you should mention so that you get full 12 marks. Chalo, let us see the answer, what they have written. See, the answer is too long, but remember, key points. See, revenue contract. W has entered a revenue contract, so it is necessary to identify the performance obligation in accordance with IFRS 15 revenue from contract with customer. You need not mention this. They've entered into a contract, so we have to identify the performance obligation. In this case, contract contains a single performance obligation. I mentioned 1 marks to construct the office block. Yes, sir. Then revenue should be recognized as or when a performance obligation is satisfied, either over time or at a point in time, depending on the terms of the contract. Here, the performance obligation is the creation of an office block or our land. So the asset is under construction and is controlled by the customer. Yes or no? It is controlled by the customer. So what will I say here now? If it is controlled, then what do we say? One simple thing. So the assets under construction is controlled controlled by the customer as it is created. Therefore, performance obligation is satisfied over time. So we have to mention this point as well as we have to write down this. A very important point. Yes, sir. A very important point. Then the expected transaction price is what? Total revenue receivable under the contract must include any variable consideration plus fixed consideration. Provided variable consideration, when will you include? It can be estimated and it is highly probable that significant reversal will not be there as mentioned to you. This is because the contract stipulates that the final payment will be reduced by 1 million for every complete month delay. If every 1 month delay we do, we have to repay it. Simple. W now expects a 1 month delay, which will reduce the final payment by 1 million. As this adjustment to variable consideration is both estimate and highly probable not to reverse, it should be included in the transaction price. Not to reverse, it should be included in the transaction price they have mentioned. So I hope this is clear to everyone. Yes, sir. They mentioned that there is 1 month delay. Will we include it? We will not include this in the your transaction price because there is a delay by 1 month. So what they have done, they have not included this as it is highly probable that it will reverse. Yes, sir. So therefore, the total expected revenue receivable by W is 32 million. In working note number 1, they have done. We've already seen, see, initial deposit 6, 8, 8 and 10, 32. This 1 million they have reduced. Yes, sir. You can directly show in brackets also, no issues. Excuse me. Since the contract is 30% completed at 30th June 2003, W should recognize revenue of 9.6 million in the current period. In the current period, we will recognize the revenue for 9.6 million. Yes, sir. See now. The statement of financial position should present a contract asset or contract liability depending on the relation between the revenue recognized to date and the amount invoiced to date. You need not write down this, huh? You need not write down. Directly write. W has received cash of 14 million, which is more than the revenue which is recognized of 9.6. The difference of 4.4 is a contract liability. This is recorded in the current liability under the financial statement at 30th June 2003. Mention this. See now, how many marks done? Sir, 1 marks. This is 1 marks. This is 1 marks. For variable consideration, technical 1 marks. So 1, 2, 3, 4 done. Then this is 2 marks, including the calculation. 1, 2, 3, 4, 5, 6 marks done. Then this this is 1 marks. This is also 1 marks. 7, 8. 8 to 9 marks done here. 8 to 9 marks done. Till here we have easily scored 9 marks. Huh? This calculation also carries 1 marks. Yes, sir, 9 marks done. Then the contract costs recognized are the monthly labor and material cost and the depreciation of the plant and machinery which is being used on the contract. So here the cost will be what? Contract cost will be what? The labor, material, and the depreciation which I mentioned. To these, to date, these are 8.8 working note number 2. Okay, they have written in working note number 2. See, okay, 6 months, and they have charged depreciation also. They have charged depreciation also. They have, this is based on the months. So 1,600, 8,800 is the cost, which we also have done it. Okay, then W would also need to recognize the cost of damaged material, yes or no, which is not reflected in the initial contract. The rectification cost of 2 million also needs to be expensed, but is not a cost of fulfilling the contract and should be recognized as a period expense, most likely within general and administrative expense. As I mentioned, it's a rectification cost. This will be recorded in the P&L because it's not involved in fulfilling the contract, and so in P&L under operating category, it's enough. The plant and equipment used on the contract will be presented as a non-current asset in the statement of financial position at 30th June. The carrying amount is what? 14.4. We have done this. That 1.6 was the depreciation. These are the things which you have to mention. 1 marks. Here 1 marks. 1 marks. So see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. As I mentioned here, 1 marks extra here also. And here also, as we have mentioned, revenue also to be recognized 1 marks. 12 to 13 marks easily. I mentioned, do not waste your time writing this. As mentioned, it is single performance obligation in it's okay. Then revenue should be recognized over the period at point in time. In the given case, we recognize over the period as we are constructing. It creates an asset for the company, our company, as the land is the control of the land is with R. Then mention transaction price. It will include what? And all these points. So with this, the first part is done. 12 marks, very easy, sir. So the first requirement is done. Yes, sir. You can pause and you can have a look on this. You can read it once if required. So with this part done. Now, chalo, moving to the next requirement. The next requirement is what? Using Exhibit 2, calculate and explain the gain arising to W Group on the disposal of the overseas subsidiary. They are disposing of an overseas subsidiary that will be recognized in the consolidated statement of profit and loss, including the accounting treatment of the cumulative exchange difference. So we have to calculate the gain or loss, as well as we have to mention what? We have to mention what? How we will treat this cumulative exchange gain. Exchange differences, which is that? Yes, sir. Whether it's an exchange gain or loss which is being accumulated, let us see now. Disposal of an overseas subsidiary. The requirement was for 6 months, and see, 4 lines they have given. During the reporting period, W sold its 100% equity investment in an overseas subsidiary. Okay, it was a 100% equity investment. If it is 100% equity investment in an overseas subsidiary, there is no NCA, so no such problem. For a proceed of 500,000. For a proceed of 500,000. So the sale proceed was 500,000. At the disposal date, the net asset of the subsidiary were 200,000 and the carrying amount of goodwill was $100,000. There is 50,000 cumulative gain on the exchange difference on translating foreign operation. A very easy question, bete. calculate. So whenever control is lost, gain or loss comes into picture. This gain or loss is calculated as a difference between the sale proceeds minus the carrying amount, yes or no, of the net asset and minus goodwill. Gain or loss is recognized in operating category. Yes. And the whenever we translate any overseas subsidiary, the exchange gain or loss which arises from your two things. Remember, two things. Exchange gain or loss will arise because of two reasons. One is net asset calculation and one is goodwill calculation. As NCA is not there, everything is belonging to parent only, and thus exchange gain or loss is recognized in OCI and accumulated in the translation reserve account. So once we dispose of the foreign operation, this translation reserve, the exchange gain or loss, is reclassified to P&L, and that also will be a gain or loss. So the requirement is very easy. They mention what is the explain the gain arising from this disposal. So let us calculate, sir. Gain. How do we calculate? Chalo. See. So sale proceeds. What is the sale proceeds? So the sale proceeds is what? 500,000 is the sale proceeds, sir. 500,000 is what, sir? Sale proceeds. Then, sir, less what? Carrying amount at disposal date. That is what, sir? Net asset kitna hai? Net asset at disposal date is what? So the net asset at disposal date is 200,000. Yes, sir. Then goodwill is how much, sir? Excuse me, 100,000. So the gain is coming to what? The gain is coming to 200,000. So this gain value will show in operating category. Operating category. So do we show in investing? No bet. In individual books, we show in investing. But here we show in operating category. Simple. Sir, what should we do about this 50,000? This 50,000 also will be reclassified to P&L. To P&L. Which category? Same operating category. So what is the total amount you will take to P&L? 2,50,000. $250,000. We will record it. Simple question. Explain it. We have to explain as well as calculation. Calculation we have done. What is the explanation? As W company has sold 100 percentage equity investment in an overseas subsidiary, that means control is lost. If control is lost, gain or loss will arise, and the gain or loss is recorded in operating category in the P&L. So the gain or loss is calculated as the difference between sale proceed less the carrying amount at disposal that includes net asset plus goodwill. As there is no NCI, it's 100%, so NCI impact will not be there. Then what I say? Then I say that's a gain is 200,000. As well as whenever we translate a foreign operation, exchange gain or loss is recognized in OCI as well as accumulated in translation reserve. It is reclassified to P&L. So in the given case, 500,000 is that. Then what are the reasons? Reasons why this exchange gain or loss will come? Because of two reasons: goodwill as well as net asset. So this 6 points we have written, 2 to 3 marks for calculation, 2 marks not more than that, and then 4 marks for explanation, because calculation was easier, it was not so tricky, etc. So let us see now. Chalo, the answer what they have mentioned. Answer में क्या लिखा है उन्होंने? Okay, yeah. So see here now. B part, disposal, gain to the group. Okay. Proceeds, we have mentioned 500, 200, 100. Then, okay, we also got 200 profit. Yes, sir. Reclassification of cumulative gain is 50. So the gain to the group is what? 215 operating category. Yes. So this calculation, 2 marks, sir. 2 marks calculation mil gaye. Now 4 sentences to get the remaining marks. See now, explanation, how we will explain that. See here now. As mentioned, W has disposed of a subsidiary. This represents a loss of control under IFRS 10. CFS, a profit or loss arises that is recognized in the consolidated profit. So 1 marks. As I mentioned, as control is lost, profit and loss is recognized. In calculating the profit or loss, the proceeds are compared with the carrying amount of the group share of subsidiaries net asset and goodwill. So both of which are derecognized. Yes, sir. Both of which are derecognized. As I mentioned, sale proceed less the carrying amount of the group share at the disposal date, and both will be derecognized. As W own 100% of the subsidiary and retain no residual interest, no adjustments are required in respect of the NCA or retained investment of the gain. If you have not written this also, no issues. You could have mentioned it is 100% owned, so no NCI impact here only. Then, sir, cumulative exchange difference. As the subsidiaries oversee the exchange difference on the retranslation of its net asset and goodwill have been recognized in consolidated statement of other comprehensive income each year and accumulated in a separate component of an equity. Yes, I mentioned as subsidiaries oversee the exchange difference arising on the net asset and goodwill has been recorded in OCI and accumulated in translation reserve. So on the disposal, this is what technical knowledge, technical marks is. So on disposal of a foreign operation, the cumulative amount of the exchange difference is reclassified from equity to profit and loss as a reclassification adjustment when the profit or loss on disposal is recognized. So when, sir, when the profit or loss on disposal are recognized in accordance with IAS 21. Simple. If you have written till here also enough. This last item, let us read it. Even though you have written 1 marks, 1, done. 4 and 2 marks calculation, enough. This recycling means that the profit or loss to the group on disposal includes the full economic gain or loss from the change in exchange rate while the subsidiary was held. Yes, it's true that this reclassified item means what? It includes the total gain. Yes, sir, when we dispose of the company. The separate component of equity is therefore de-recognized as the group no longer has this overseas subsidiaries. We de-recognize and we shift to what? We shift to your P&L under operating category. So with this part is done. The second requirement also, I think it was not so tough. It was easy, only out of 6 we can easily score. Let us take from the 12 marks, easily we can score 9 to 10 marks. Here also out of 6 easily we can score 5 marks. So 15 marks done. In the next requirement, let us focus on getting 5 marks. Enough. Yes, sir. Chalo then. Let us start with the next requirement. Okay, let us read the next requirement. We already know that it is regarding deferred tax. Using Exhibit 3, discuss whether the deferred tax asset should be recognized in financial statement for the year ended 30th June 2005. So they are asking whether we should recognize deferred tax or not. Remember in the class, in a regular class, we have done 6 to 7 questions from the past papers also. Same question bete. Same question hai. Kuch alag nahi hai. It's nothing new. In our class, we have done 2 basic questions. If you remember, one question was regarding the exchange, the tax rate also was involved in this. One question. Then from the past papers, we have done 3 to 4 questions. Yes, sir. Chalo then. Sir, when can we recognize a deferred tax asset for losses? We know कि it was trading losses. See, we know starting exhibit जब पढ़ा था ना उसमें लिखा था. We had seen in the exhibit part. So अभी क्या करेंगे इसका सर? Simple technical knowledge. Focus on technical. 7 में से 1 or 2 technical marks. Get it? As per IAS 12, sir, deferred tax asset will be recognized when there is a deductible temporary difference. When there is what? Deductible temporary difference. When there is a deductible temporary difference. Then, in case of whenever there are losses, can a company recognize deductible temporary difference when there are future taxable profits? Yes. So, in case of losses, a company can recognize a deferred tax asset if the losses can be carried forward as well as future taxable profit should be available. Either future taxable profit. Can I say if future taxable profits are not available, then the company should make taxable profits through tax planning opportunities. By planning your tax properly, we can make some taxable profits. So in that way also we can recognize. Yes, sir. Now when we carry forward the losses, it should be allowed by the government. And now in future, profit should be there. Can I say when we say in future profit should be there, it is a judgment or not, bete? It is a judgment, sir. It is very difficult to determine whether profits are there or not. So the company is making losses only for the past 3 years. So then in future, for the profits, to have profits in future, it is very difficult unless and until we have a very good customer, we have signed a contract, evidence is that. Today I'm saying losses, my company is making losses for the past 3 years. And I say today, in coming 5 years, my company will be making good profits. What is the evidence? Proof kya hai? Proof should be there. Evidence should be there regarding this. We have discussed this in the class. Yes, sir. Chalo, let us read this. What are they saying? After incurring substantial losses in the year to 30th June 2000, X0, X1, X2. Okay, the company is making losses for continuous 3 years. X0, X1, X2. W made a small profit before income tax in the year ended 30th June 2000x3. Okay, in 2000x3 they have made a very small profit. Does this small profit in the current year gives a guarantee that in future profits will be more? No. Evidence or proof should be there. This included significant non-operating gain. Arre baap re baap. Or evidence. You got more. See, they are saying the small gain which we have made. No, it is based on non-operating gain. Like we are selling some asset and making profit. We are selling some asset and making some gain. They are saying what this includes significant non-operating gain. So by just reading the first sentence, I get to know ki they should not recognize deferred tax. By just reading because the company is in losses, sir, and the profit which they have made in the next year is very small profit, and that small profit also is not from operating, baba. It is from significant non-operating gains. It's not from the business gain. It's not a actual operating gains. It's non-operating gains. And you know, sir, non-operating gains will not be permanent. It's not that every year we'll get that gain. Very difficult. Yes, sir. Then in December 2002, W recognized a material W recognized a material deferred tax in respect of carry forward losses. Even though the company is making losses, they are saying that in 2002 we have recognized deferred tax asset, and that deferred tax asset is material. Arre baap re baap. It will give a wrong impression to the shareholders also. It is a material item, but the profits are very small. ओके कोई नहीं चलो प्रॉफिट है एक साल में बट दीज प्रॉफिट्स आर नॉट कंसिस्टेंट बिकॉज इट्स फ्रॉम अ नॉन ऑपरेटिंग गेन सर which will expire in 2000x5. Okay, sir, it will expire in 2000x5 only. X5 only. That means the carry forward is still 2000x5 only. For this 2000x2, the carry forward is still 2000x5. So 2000x3 small profits. From this, nothing we can do. It's Kalepuri. We say no here. And then in 2000x4, 2000x5, only 2 years are there. Sir, it is very difficult for the company to be profitable in 2 years. I think because of this data which is provided. Because one thing is what, sir, because why I'm saying so much, because non-operating gain. It's from non-operating gain, better. If it was from operating gain, okay, company can come in profits, we can think, but strictly they mention non-operating gains. W continue to recognize this asset in 2000x3. W continue to recognize this asset in 2000x3. See, they still recognize this asset here. In 2000x2 only, they mention that will be in profit based on the budgets and assume high growth in profitability. Why they have why they have recorded this deferred tax asset? Why? They are saying that based on budgets that assume high growth in profitability. अरे बाप रे बाप the profit जो बना रहे हैं the profit which we are making is from non-operating gain. How can you assume your growth will be very high and you'll make very good profits? Provide some proof, evidence saying that I've signed a contract with Ambani that he'll do business with me. Then only we can believe. No, no evidence, no proof. Let us read. Have they provided any evidence? Then W management considers the budgets to be realistic. अरे बाप रे बाप. Management is also saying कि budgets are realistic. कैसे realistic है? It's a non-operating gain and you're recording a material deferred tax and saying growth will be very high, etc. It's not like today I start business, from tomorrow I have bumper profits. ऐसा possible नहीं होता है. See, as there were positive indications. Okay, they are saying positive indications are there based on the our judgment and probability from customers about future orders. Okay. They are saying what? Positive indication is that from customers' future orders, planned expansion into the new market and new product. अरे बाप रे बाप. They are saying what? No? See, they are saying positive indication is coming from what side? From customers' future order. Okay, you are saying you have future order. Proof. Proof chahiye, proof. Show the proof. Okay, they're telling. Planned expansion. They have planned some expansion into new markets and new products. Is it guaranteed that if I plan expansion into new markets and new products, it will generate profits? Not, sir. Then at 30th June 2003, net deferred tax amount to 40% of the shareholders' equity. Arre baap re baap. The amount is material, huh, beta here. That is the reason they mentioned. The net deferred tax amounted to 40% of shareholders of equity. There are no tax planning opportunities. So tax planning are not that. Tax planning opportunities are not available to generate taxable profit in short term. Tax planning opportunities are not available to generate taxable profit. Either profits will come from your business, or here and there with some jugaad you can make taxable profits, but that is also not available. Here I can see one a lot of points. Many issues are there. Non-operating gains you have to link. Then the time period is very less, because normally when we see in India we can carry forward our losses for 8 years, 5 years, 6 years. Here it is 2 to 3 years, bete. And they're just saying कि okay, budgets are prepared. We have prepared some fancy budget, etc. Okay, you are prepared, Baba. No issues in that. Proof to चाहिए ना. Without this, if you record, can I say it will provide a faithful representation? नहीं. We are manipulating the books here. It is not probable here. And we mentioned deferred tax asset is recognized when it is highly probable that future taxable profits are available. Here, the probability is very low because manipulation is done here. Everything is wrong here. Just they are saying for namesake. So, can we recognize deferred tax asset? No, sir. See here, discuss whether I say deferred tax asset cannot be recognized. If you say yes also, but there are a lot of flaws here. This, if this one was not there, no, and this they would have mentioned we have evidence also, etc. And the market into which we enter is really good and it is growing in the economy, then I can say okay, okay, it's okay, we can believe yes. But here it's non-operating gain and customer about future orders. Future orders, what is the confirmation evidence? All these points you have to mention. So the question, first write down the technical knowledge, then link each and every point. Link this point 1 marks. Link this material which is wrong. Expiry is 1 marks, 1 marks, 1 marks. Then they have assumed high probability. Assumption is not required. Proof is required. Then one more marks. 1, 2, 3, 4, 5 technical marks. Two more marks. Excuse me. Here you mention key we need some proof. One more marks. And here then tax planning opportunities are also not available, so we can't record. A conclusion also has a marks. So easily 7 to 8 points we can frame here. Yes, sir. So as mentioned, cover these points. So chalo, let us read the answer. What is mentioned in the answer? क्या लिखा है answer में? Okay, 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 okay. This is the answer which they have mentioned. Okay, let us break it up in simple points. See now, trading losses carry forward creates deductible temporary difference. Yes, sir, we know. They may result in the recognition of deferred tax assets. So the tax benefit of the losses can be matched against the accounting loss reported. Yes, accounting loss are there relating to the loss we have benefit. This reflects the likely reduction in the future tax payment when sufficient taxable profit arises. Even though if you're not able to write the same thing, you can write down as trading losses can be carried forward. It creates a deferred tax, a deductible temporary difference, and on this we can recognize a deferred tax asset. So the losses for the accounting losses, there is a tax benefit. So that means in future less tax. However, a deferred tax asset can only be recognized, if it is more likely than not that it will be recovered. Judgment is required as to whether that is reasonable. It is reasonable to assume, in the light of past losses, that sufficient taxable profits will be generated in the future in accordance with the recognition criteria. I will not write so much so high. They have written a little bit complicated, right? Simple. As per IAS 12, deferred tax asset is recognized when deferred tax asset is recognized for all deductible temporary difference when future taxable profits are there. As per IAS 12, for trading losses, we can recognize deferred tax asset when the losses can be carried forward and it is highly probable that future taxable profit will be there. If future taxable profits are not there, we will not recognize. Then now, here they mention the judgment is required, etc. You can write down this point. This point, yes. Then coming to the next point. Here, what I mentioned, you write down here. It's little bit this one complicated because it is recognition criteria only. What IS 12 is saying. Then, the existence of unused tax loss is a strong evidence that the future taxable profit may not be available against to offset the losses. Yes or no? Already the company is in losses in 3 years. I mentioned link it. I mentioned link it to the case. The existing loss of the company from the past 2 to 3 years indicates that it is very the chances are very less that in future the company will become profitable easily, and we can recognize deferred tax this one asset. IS 12 indicates that a history of recent losses creates a rebuttable assumption against recognition unless evidence is provided. Some evidence should be there, but unless evidence are not there, we can't recognize. Some of the other evidence should be there which should provide, but here it is not the case. I mentioned right down about this evidences are not there, and you can mention that as the losses, so it is strong enough that it is evidence that it is difficult for the company to come into profit and record a deferred tax asset or offset its losses. Then, W unused tax losses do not appear to have resulted from isolated or exceptional events. See, they mention that unused tax losses do not appear to have resulted from isolated or exceptional event, but rather from weakness in ordinary operations. Why? Why the profits are not good? Array, don't write this complicated, Baba. Write down simple point that as we can see the profits of the companies are decreasing. Yes, these decreasing profits are not due to some losses or one-off event in the year. Yes or no? It's not due to some one-off event like restructuring, etc. It is because of what? The profits are decreasing. Operating income is not there. All these are the reasons. So the profitability is very lesser. As we have seen the gain also, which is that the gain is from what? Non-operating activity. Link that. Link here that one. No need to mention this. You can link that. As we can see, the profits of the companies are decreasing. The main reason is not because of any one-off item, like we are disposing of any subsidiary or etc. Because of that, we have a big loss. No. Here they are saying that the overall business is only weak. The operations, the daily day-to-day operations are weak. Revenue is not that. That is the reason. Additionally, there are no tax planning opportunities available to W that would create a taxable profit in which the unused tax losses could be offset. So I can make this one point. I can make this one point, as well as what is the next point I can link. See, iska ek one point hai. And then the limit is what? The time frame. The time frame is what, bete? The time frame is within 2 years, and it is very difficult that the company will become profitable. It is very difficult that the company will become profitable here. Read it. Have a reading once. Chalo, 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 chalo. Have a reading. Chalo, 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 chalo. This you can write down. This you can link to the technical knowledge which we have learned in IAS 12. Then here you can mention that due to the past, to the current laws as well as the past laws, it's a strong evidence that it is difficult for the company that in future taxable profits will be available, and it's an assumption, etc. Then the this one, the unused tax losses are not because of any one-off event. It's because of the weakening in the business activities and profits are less. Then there is no tax planning opportunities, and you can write down that these losses are the expiries within 2000 x5, and till 2000 x5 it's difficult that the company will come into the company will make taxable profits or recovery will be there. Yes sir. Then the last 2 points. The improved current year performance is not an indicative of future good performance. Yes, see. Yes or no? As W would have suffered a net loss before tax had it not been for the non-operating gains. Yes or no? They are saying yes, see, they have linked it. I mentioned this point on, you have to link it, yes. W anticipation of improved future trading could not alone be regarded as meeting the requirement for strong evidence of future profits. See, they are saying that improved future trading is there, etc. We will make good profit, etc. It's not alone. It's not that by saying it'll be. We need some proof. Forecast must be supported by firm order or executed contracts, which appear to be lacking in this case. Yes, I mentioned proof should be that they have mentioned this. Even though in your exam you're not able to link this much, it's okay that you write down what it's because of the operating. And W company has mentioned what, that improved future trading is that it's not itself a requirement to say ki okay for sure profits will be there. Some evidence or proof are required about the forecast which we have made. Then accordingly at the reporting that conclusion accordingly at the reporting date, it is unlikely that W will generate taxable profits before the unused tax losses expire. Yes, it is unlikely that W will make taxable profits because of the time limit also. The time limit is expiring within 2000x5. Therefore, the recognition of deferred tax asset on losses carry forward does not comply with IFRS financial reporting standard. It does not comply here. So here also 1 marks. Even though I mentioned better, you will be able to write down this point, the basic point. This also linked to the knowledge, to the this one standard, and write it down. What are the technical knowledge which you have learned? Then write down the point about that evidence, a strong evidence that the future taxable profit may not be available because seeing the current condition in the past thing. Yes or no? Because his current losses as well as the previous year losses also, it's not a evidence showing that we can come into profits. Then you can link here this point, you can mention here also about this first point, huh? Then the second point you can explain it separately also, this one. Then you can mention that the unused tax losses does not appear or to have a result from isolated or one-off event. So it is seems that the business of the company is bad, even though you're not able to, but you can mention that this one point is very good point to link it to the case. Additionally, there are no tax planning opportunities available to W that would create taxable profits. So it's difficult to recognize. It is difficult to recognize deferred tax asset or to utilize the tax losses, as well as the loss is expiring by 2000 x5. Further, there is a limit. Then you can mention about these. The indication of improved future trading could not alone be regarded as meeting the requirement for strong evidence of future profits. There are other things also which we have to consider. Proof is required, which lacks in this case. Then you can mention that it is unlikely that company will generate taxable profits, so we should not recognize the deferred tax on the trading losses. So with this part is done. So your section B, question number 1 is done. A very easy question. Not easy, will not say so easy, sir, कि sir पूरा easy था question. नहीं बेटे, इतना भी easy नहीं था. Yeah, I know that you will say me कि sir for you it is easy only. नहीं बेटे. Why I say in this revenue easily out of 12, 9 marks, 9, 10 marks, 9 to 10 marks. Yes sir. Here disposal it was a requirement 6, 5 marks easily. So 9 plus 5 how much sir? 14 marks. Here also 5 marks I say. 19 done, 19 to 20 is very good score. Understand, 19 to 20 is a very good score by writing basic points. So with this question is done. I hope this discussion helped you regarding the question. So I hope the preparation is going on good. Prepare well. All the best for your exam. The question number 4 also I'll be uploading soon, so you can watch it. So bye bye. Have a good day. Signing off. Radhe Radhe to everyone.